Okay, in this video we're going to be taking an in-depth look at STAG Industrial. This is a leading player in the industry that's been making waves in the real estate world. So if you're interested in investing in industrial real estate but you're not sure where to start, you don't need to look any further. We're going to have a quick look at the company's history and strategy, but we'll also learn about their growth potential here as well. Now, they've got a portfolio of over 100 million square feet of space, and it is a company that you don't want to miss. So if you're ready to discover the future of industrial real estate and potentially secure a profitable investment, make sure you watch this video from beginning to end. Now, since inception, STAG Industrial has grown quite remarkably in terms of the overall sales revenue. Now, like many REITs, they do issue new shares, and so there's an explosion of the share count. So we don't see the usual share buybacks that we see with other types of companies. Now, as a company, they're not really aiming for that premium product or that premium, highly desirable warehouse space. They're often looking for the more grungy or gritty or less desirable locations, and flying under the radar of many of the other larger REITs and investors that way. Now, it's also important to note that we're in the middle of, we're at the start of a large glut, so we're talking here about a wave of almost 1 billion square feet of warehouse space that is going to be finished very, very soon. Now, what we can expect is that's going to put pressure on their ability to lease at good prices, and so we might see some weakening of AFFO, or adjusted funds from operations, in the near future. Now, despite that large amount and volume of industrial real estate coming onto the market in the near term, over the long term we might expect to see a drop off, and we might see the construction of new warehouses begin to reduce, largely down to high capital costs and construction costs. So the relief then that the industrial real estate market may feel could be quite short-lived. And so over the next 5 or 7 years we might see some benefit to STAG Industrial because of these shifts that we're seeing here. Okay, so we can see since the inception in 2012 there's been times where it's dipped down to about almost into single digits really, in 2016, or into about 15 times in the price to AFFO ratio. That's basically equivalent to the price to earnings for a REIT. At the moment it's trading at about nearly 19 times, so fairly richly valued compared to this blue line here, which is the normal price to AFFO ratio it's had in the past of about 16.3 times. Now, this puts the dividend yield at about 4%, and we can see over the years the AFFO growth has been at times at 7%, 1%, minus 3% into 2020, 4 and 8% in the last couple of years, with expectations of about 5% AFFO growth moving forward. So what are we looking at into the future? Well, we can see from the analyst estimates of the AFFO, we can see some changes over the last 6 months, generally revised down, but very small amounts compared to some of the other companies and REITs, with the exception here the 2025 estimates from one analyst, where they've increased the estimates moving forward. Now, the big question is, if we project out to the end of the 2024 year, we're talking only about a rate of return here expected of about 6.5%, or a total annualised rate of return of only 3%. Now, that's a function of relatively slow AFFO growth, coupled with relatively high valuations now in terms of the price to AFFO ratio. So, is this a good investment? Well, it's got a reasonable dividend yield. We can see the dividend is expected to increase a little bit in the coming years, not substantially quickly. And one of the big questions is this, the best deal? Now, some of the other REITs in the industrial space have been suggesting much greater FFO growth. So here we had about an 8% FFO growth for 2022. Prologis PLD, I think, turned in FFO, funds from operations, growth of about 24%. East Group Properties, EGP, turned in about 16%. First Industrial Realty Trust is looking at about 13%. So STAG Industrial, I think, is lagging a little bit behind here, and they pulled in only 7% in FFO. So where the other industrial REITs have a price to FFO multiple into the 20s, STAG Industrial's got a lower one, and I think that's reasonable, and I don't think it's cheap because of this relative to its peers. I think it's cheap relative to the improvements in the AFFO and the growth in the AFFO that they are experiencing, and also the growth that they're expected to experience. It's a relatively low multiple compared to the peers because it is growing less quickly, and I don't see any way that's going to change in the near term. Now, the current price here is at about $36. I think, you know, if I was looking at it, I'd be looking at an entry price probably at about $32. I'm sort of kicking myself for not picking it up here at about 15 times price to AFFO, but I think anywhere down about $32 would be a nice entry point for me looking at this REIT. I think if you can pick it up at those sort of prices, you can probably do fairly well and holding it for the long term and just riding this growth in the AFFO and riding the dividend yields and the dividend increases. So look, if you have an interest in STAG Industrial, hit me up in the comments down below. Let me know if you think this is a really good pick at the current price. If you are holding it, let me know if you've done well in this company, and if you're looking to add it to your portfolio, let me know the price that you think this would be a really good buy and a really good entry price. So stick around and we are going to cover more REITs soon.